So the Bank Indonesia's nominal policy rate is at record lows, and 3.5% in Indonesia seems, we should always compare interest rates to inflation. It's the real interest rate that matters, and core inflation, inflation excluding things like food and energy in Indonesia, is below 2%. It's 1.75%. So if you take that away from the policy rate, you get the real policy rate, and that's still around 2%. So that's about the average we've seen over recent years. So in fact, Bank Indonesia's policy is not exceptionally loose when you think about it in real terms, when you take account of the fact that inflation is already very low.
125 bips or points, Bank Indonesia already lowered and adjusting its main interest rate. Along the way, how did you see the effectiveness? Has it really somehow give us a visible impact in boosting our economic development and growth as well during 2020?
It helps. There's no doubt it cushions the blow from COVID-19. I think BI has been quick to respond, and that's been helpful for the economy and prevented worse outcomes in 2020, and hopefully provides a bridge to the recovery this year. But let's remember two things. First of all, as the policy rate was coming down, inflation was falling. In fact, inflation was falling very quickly. Again, real interest rates have not fallen by as much as nominal rates. And it's the real interest rate that matters for households and firms. And the second thing is the transmission of low interest rates to the real economy in Indonesia is still a little tricky. It takes time to work through. We know, for example, bank lending rates have only fallen by 80 basis points. So I think there's still work to do for BI to get these low policy rates into the real economy.
Though main interest rate transmission is not really yet interpreted in the real economy, how did you see the gap when we talk about monetary and fiscal policy within Indonesia context? What needs to be bridged when we talk about the gap? Because many believe that the speed are completely different sometimes.
Well, I think the government has been, again, proactive on the fiscal policy front, and like other governments around the world, has decided that fiscal policy has to play a very big role in this crisis. And that's the right policy, because central banks can only do so much. So to take an example, when an economy is suffering because people are staying at home, just because you cut interest rates isn't going to make people spend, and that's where fiscal policy comes in. So the fact that they are working together, I think, has been quite helpful for growth so far.